Good afternoon and welcome. We've had one or two technical difficulties. I hope everybody can see the screen there. If you can't, can you please email into us or use the questions box. So good afternoon and welcome. My name is Kevin Igo, Managing Director of Professional Fee Protection. I'm delighted to be joined today by Mike Down, a tax investigations partner at RSM. And what we're going to do today is really run through some aspects really of general compliance checks with HMRC, because we're seeing obviously more and more of them as we go along. So firstly, welcome, Mike.
Thank you, Kevin. Good afternoon, everybody.
Tell our listeners a little bit about yourself.
Yep, I'm a former Inspector of Taxes many years ago, some 33 years ago. I've been with RSM and predecessor firms since then. I deal almost exclusively with tax investigation work and do a number of seminars and webinars such as this on tax investigation issues.
Okay, thank you. So as usual, if anybody has any questions, please feel free to send them in the normal way and we'll get through as many of them as we can. So without further ado.
Right, I'm going to deal with 4 different areas. We're going to look at sort of the whole sort of chronology of a tax investigation, a tax inquiry. Start off by looking at the check, the start off of the check, how it begins. We'll then look at how we work the check. We then look at meetings, and finally how investigations can be brought to a hopefully successful conclusion. So these are the different types of revenue check. Gone are the old days when we just had what was called back duty. Now we have all these and probably more that I haven't highlighted there on the screen. Ranging from sort of the old traditional ones like VAT checks, employer compliance checks, and formal inquiries, which is what we're going to be concentrating on today, a formal, I suppose, full inquiry we'll look at today. But around all that, there's all these others as well, in particular, informal interventions. You might just get a phone call from HMRC asking for information. Of course, the law says everything has to be done formally if a tax return has gone in through the formal inquiry process. And you might want to consider with your client whether you cooperate with the informal intervention if you get one, or whether you insist on the revenue making it formal. But more seriously, there's the Fraud Investigation Service ones, Code of Practice 9, suspected serious fraud cases, and indeed Code of Practice 8 cases. And then, of course, the task forces we're seeing increasingly and have done over the past few years. And some of the things I'm going to be saying today actually relates to task forces. But the main concentration, as I say, is on the formal inquiry process. Right, how does a compliance check start? Well, normally it starts with an opening letter. The revenue will write to you and your client. And the first thing you should do when you get that opening letter is to check that it's been given within the inquiry window. Inquiry window for basic income tax cases being 1 year after the tax return was submitted. Most, I suspect, tax returns go in January, so I think we tend to think of 31st of January as being the date for the closure of the inquiry window, but it's not that. It is actually the 12-month anniversary of the date that the tax return goes in. Sometimes you get letters from HMRC that are very apparent that they're well outside the inquiry window. If they are, the revenue should somewhere in that letter suggest that they have the possibility of having a discovery position. They'll say something in there about we think we've got the opportunity to issue an assessment under section 29. That's what they will say. But very important to check that notice, and certainly Kevin, I think, would look at that when looking at people approaching him. Always look to make sure that the notice has been served on time, because if it's not and there is no discovery position, then go back to the revenue and say you're out of time.
Yeah, quick answer from the Mehmet. Is it received by the taxpayer for the 12 months or the agent?
Yeah, by the taxpayer. It must be the taxpayer, yeah, on there. Sometimes you get situations where the taxpayer don't have the wrong address, for instance, and you may then have a situation where the notice may not be valid.
And is there a different inquiry window for large companies?
Yes, there will be. You would look to be the time, but the 12 months following the year of the accounting period will be. Yeah. Starting the compliance check, then the opening letter. First thing when you get the letter, I think, as agents, we should sit back for a second and we should think, why have the revenue opened this check? The revenue's approach to selecting cases for tax inquiry is very much risk-based. And they've been really helped in recent years by this new Connect supercomputer system that they have, where lots and lots and lots of different pieces of information are fed into the computer. And from that, the revenue can then risk score a particular case to see what the chances are of getting a result out of it, getting more tax out of it. Added to Connect, of course, we now have common reporting standard information flowing around the world. Some 100 jurisdictions have signed up to the common reporting standard, and this information is being fed into the revenues computers again to help them select what they regard to be the right cases for inquiry. But there's also the revenue very carefully now look at information that's in the public domain, and this really is sort of a big brother type approach we now see. And this is from a letter I saw with an opening compliance check letter. I think it's likely to become pretty much standard actually in the letters that go out from HMRC. HMRC may observe, monitor, record and retain internet data which is available to anyone. This is known as open source material and includes news reports, internet sites, companies' house and land registry records, blogs and social networking sites where no privacy settings have been applied. So if you see clients sort of boasting on their Facebook pages that they've done such and such, the revenue might want to look at that, and they might decide that that's grounds to feed into Connect and do a risk-based selection on the tax investigation. So I'll just put that in there because I thought that was quite interesting now to see the revenue being very sort of open as to regards to the information that they are looking at when selecting tax investigations. So then, getting back to the opening letter then, is the request for information that the revenue have asked for, is it informal? Doesn't mean to say it's an informal inquiry, but is the information request informal? And vast majority of cases, when the opening letter comes out, it will be informal. It will say, looking at the last point there in the slide, can we have a reply by such and such a date to this information? Hopefully, in most cases, that information, if it's reasonable and relevant, will be supplied on time. Very important, though, just to dwell on what is reasonable and relevant. It has to be reasonable and relevant for checking the taxpayer's tax position for the inquiry year. That's the guidelines which the revenue are supposed to be following on that. And how often is it we see where maybe the revenue just pushing boundaries as to the sort of information they want? In which case, you should ask the revenue to justify why they need the information before just sending it off to HMRC. The one exception is with regard to statutory records which the taxpayer is by law compelled to keep. In those circumstances, particularly with the business records, the revenue are entitled to see them. The reasonable and relevant test doesn't come into it. Although there is no harm in pushing back and saying, well, yes, these are statutory records, we understand that, but it really is too onerous to provide, every piece of information you're asking for here. Can we talk to you about maybe limiting the scope of your request for these records? So that's the start from the opening letter.
A question from Michelle: do they need to send Section 9A notice out in a self-assessment inquiry first prior to sending a formal Schedule 36 notice?
Yes, they do on those circumstances. They can ask for information where there is no tax return in place. They can issue a Schedule 36 notice, but if a tax return has been submitted, then they have to, everything they ask for should in theory be under the formal inquiry system with Section 9A notice.
So if they, just to clarify for that listener, if they then they don't issue a 9A, but they issue one of the informal inquiries, they can't issue a Schedule 36 notice.
Just in theory, that's what they should do, but I think they could try it formally, but normally they would progress informally first of all, and I would hope that, if they are going down the informal route, that they do make it very clear they are, and that what you give them is, is up to you, and you're not within the formal regime. But very important, I think, when the inquiry starts, when the open letter comes, you make immediate contact with the client. Let the client know you've got the letter, you're onto it, you're going to help them get through this inquiry, however long it's going to take, and hopefully it won't take too long, providing you do everything properly and the client cooperates with you. Also, critical, I think, that you make contact with HMRC right from the early stage. Some letters HMRC send out say, I will ring you on such and such a date to make sure you've got this letter and to discuss it. I always think get in first. Ring the revenue first of all. Make it known that you're onto it. You want to get some control over this inquiry and the process that's about to unfold, and build rapport with the HMRC officer. You may be dealing with them for some time over the course of the inquiry, so you might as well get to know them at the start. and in particular to push them, if they haven't already said it in the opening letter, on this openness and early dialogue point. The revenue are supposed to let you know what they are focusing on in the inquiry. We do get inspectors who say, I'm not going to tell you that, but you should push them. It helps everybody to know where the focus is, because you can decide then what are the main points we need to look at here. You don't then need to waste your time on peripheral issues. You can deal with the ones that really matter. If you've thought through what the risk might be and there is some openness and an early dialogue going on, you can then focus on that, and it will help to speed up the process, hopefully. But having been through all these thoughts, that's the point at which you then start to work on a response to HMRC's opening letter. Follow up then on that opening letter. What happens if you delay in responding? The revenue say, let me have this information informally within 30 days, within 5 weeks, whatever they put in it. What if you don't respond to that? In particular, what happens if you haven't made any contact with HMRC in the meantime by telephone? Well, what the revenue will then normally resort to is to the issue of a Schedule 36 formal information notice. They will go down that route. What you need to think about when you get a Schedule 36 information notice is you're potentially in a penalty position if you don't comply or if you don't appeal. And be very careful with the time limits for the appeal, because often the Schedule 36 information notice will say, let me have the information within a date that's say 6 weeks away. But the appeal period is 30 days from the date it serves, from the date the taxpayer received it. So it's very important that if you are going to appeal, and sometimes you will need to appeal because maybe it is too onerous what the revenue are asking for. Maybe it isn't going to be justified under the reasonable and relevant test. Particularly here, I'm thinking of bank statements, private bank statements. If you've got a business bank statements, yep, that could be fine. Maybe statutory records, no problem in providing those. But if the revenue are then going, I want to see the private statements as well, without justification, then again, you should initially resist on that, and get the revenue to justify why they need to see those. They may say, well, there's very low means. You know, we've seen from self-assessment return that drawings aren't commensurate with the apparent lifestyle of your client. In those circumstances, that might be justification, but I would make the revenue work for it if that is what they want to get. If you don't comply with the Schedule 36, formal Schedule 36 information notice, again, you then get into a potentially a penalty scenario.
Okay, we have a question here. A letter was sent to a client for a check of records, details of visit. They're looking to look at the last 4 tax returns as they believe they should have registered for VAT, which was 2016 only. Surely the window of inquiry is closed.
Yes, it would do, but are we looking here, I wonder, at a formal income tax inquiry, or is it about that issue?
They're not registered for VAT.
They're not registered, so it would just be the formal revenue inquiry. Yes, I think they are. It would be in a discovery position, but what you would expect to see from that, by the way, there's no such thing as what they call a discovery inquiry. It's either an inquiry within time limits or it's a discovery situation. I would expect to see in that letter something about they raise assessments under section 29, but of course they may go in separately on the VAT side anyway as a visit on that.
And what happens if HMRC are the ones causing the delay?
I'm going to come on to that in a minute, if I may. In fact, on this slide, it's going to come on in a minute. I'm going to read you something from the Revenue's instructions actually on that. Responding then to the opening letter, keep the client and the revenue obviously in the loop all the time on this. Keep the rapport going. Obviously, the client will want to know what's going on. The revenue officer will want to know what's going on, and you want to try and get some control, you know, on what's happening on it. Collate any documents and information, get it all together. The notice, the informal notice, often looks very similar to the formal one in the way it's set out. Follow what the revenue have said, you know, points 1, point 2, point 3. Send a little summary with it. Point 1 attached. Point 2 attached to the extent of such and such. Can you justify such and such else, and so on. Prepare a covering letter to go with it, with the information you're sending in, and hopefully another covering summary saying what documents you've got there. And in particular, getting on to that last question there, set a target response time for the revenue. They're very keen to say to us as agents, I'd like a reply within such and such a date. That may be a reasonable time, it may not be. But when you get back to the revenue, put on it, please let me have a reply to this letter by such and such a date. And I'd suggest you use the same time that the revenue have put in the letter to you. So if they've made it just say 21 days, you ask them for a reply within 21 days as well. And what we're looking at here in the guidance here, and this is very useful to quote back to HMRC if you get delays on the revenues part, is the Inquiry Manual 1813. And this starts off, working the inquiry, keeping control, avoiding HMRC delay. Unnecessary delay by HMRC in working an inquiry will make it much more difficult for you to resist an application for a direction for closure, to move things along if the taxpayer agent is not cooperating, and to support the imposition of penalties. And then it says, not only is it embarrassing if the department appears to be trying to enforce higher standards than it is shown itself, but it may leave you open to justified complaint that could result in penalty abandonment. So I've used that several times where the revenue have been delaying, and often you get this with valuation disputes and the like. Everything sort of goes off into the ether and you don't hear for 6 months or so. Always worth quoting this EM 1813, because the revenue, they shouldn't be opening so many inquiries if they haven't got the staff to work them. That's what it comes down to at the end of the day. They should be working to a fair playing field in terms of the time limits that are being set.
A quick question: do you consider a Schedule 36 notice is valid if it's not signed by a named officer? Just to see
yeah, that's a good point. That one hasn't been tested, I think, at the moment. We're seeing a lot at the moment, obviously, of cases going through the tribunal with regard to penalty notices, as to whether those penalty notices can be issued by a computer and the like. I think it's worth pushing the point back, and if in doubt, go back and say, ask the revenue, do you regard this as valid since it hasn't been signed? We often see that now because often they get issued by email. And we received so many letters from HMRC that aren't signed in any event. So I think it's worth asking the question, certainly, on that. Right. Just a word now, I mentioned task forces on that first slide there. And we're coming across at the moment, and certainly at Kevin's recent ICAEW event that you ran, Kevin, these questions came up, I think, around this. It's worth, I think, dwelling on this, just saying a few words. Some of these task forces, particularly into restaurants, we're seeing unannounced visits happen more frequently. Unannounced visits happen normally where the revenue effectively want to catch the business by surprise, need to be authorised by a senior officer. And the revenue typically will turn up at 11 o'clock at night in the restaurant, just as the cashing up's about to happen. They'll be wearing their high-vis jackets, so they will cause a bit of a stir sort of when they go in the door. They will quite properly give the proprietor a copy of what is a Schedule 36 notice, saying you do not have to let us in. But in reality, what proprietor, faced with the number of HMRC officers in front of them late at night, tired out after working all the time, is going to resist. And I think the revenue sort of half expect to be let in. But if you have restaurant clients and the like, do please let them know that unless it is a formal search warrant signed by a judge, they do not have to be let in. It is an inspection, not a search. That's what it will be. And the tribunal has a role to play in this as well, because if they turn up with a Schedule 36 notice just signed by a senior officer, and your client says to them, "Go away, I don't have to let you in," the revenue can then go to the tribunal and ask the first tier tribunal to authorise that notice. They may then come back, and if that happens, again the taxpayer can say to them, "Go away, I don't have to let you in." But what will happen then in those circumstances is there will be a penalty for obstruction. That will happen if the first tier tribunal has authorised it. We did do a Freedom of Information Act request to HMRC, asking how many times that sort of situation had happened, that they turned up late at night with the Schedule 36 notice signed by the senior officer, taxpayer had said, "No, I'm not letting you in." How many times we said to the revenue, "Have you then gone back to the first tier tribunal?" And they didn't answer it under the Freedom of Information Act request, because they said the information we provide to you may fall into the hands of criminals. Now, I would have thought they would have wanted it to fall into the hands of criminals, so the criminal fraternity were aware that they were following this through. But there was a very interesting response. And on the timing of the visit, again, if you get any sort of issues like this with the revenue, look at Compliance Handbook 254460. And I really like this because it talks about unannounced inspections can only be made by an authorised officer, an officer with an authorised officer's agreement, or any officer with the approval of the tribunal. Okay, that's just what we've just covered. But at a reasonable time, it talks about as well. And a reasonable time is one in which premises are open for business or when staff are present. The vast majority of times will be between 9 AM and 5:30 PM Monday to Friday, but other times are possible. So there it is. That's what the Revenue's instructions say. What is reasonable will, to a certain extent, depend upon the nature of the business. And then, for example, it gives a little example there. Delilah's restaurant is open for food between 6 PM and midnight. The staff are on the premises from 12:30 PM preparing food for the evening. Delilah may find it more convenient to have you visit in the afternoon before she greets the diners in the evening. Now that seems to really sort of fly in the face, really, of what the Revenue are actually doing on the ground. And you can understand why they're doing it, of course you can, but it does seem to be these task forces, in looking at restaurants that are forcing these unannounced visits.
So certainly from what we see, more people let them in than don't.
Yeah.
When they turn up, as you say, just like the village people,
yeah,
demand to be let in.
Yeah, they will show their warrant cards, obviously, as they come in. Very important they do show that. But I think just by saying this is a warrant card might make the individual on the receiving end think this is a warrant, but it's not. The notice that entitles them to ask to come in is the unannounced visit notice, the Schedule 36 notice. That's what it will be. So just to dwell on, I just wanted to mention that because I think that is quite topical. So working the check now. Obviously, any further requests the Revenue send to you following the receipt of that opening letter, hopefully within a reasonable time, they'll come back to you. Continue to keep the client in the loop. Obviously, do that. Let the client know what's going on. If there are further information requests, again, are they reasonable and relevant? If you've asked the Revenue to justify anything, have they done so to your satisfaction? Sometimes the Revenue asks for mandates and go for third-party requests. There is a new civil information powers consultation out at the moment where the Revenue want to almost do away with the need to go to tribunal to get a third-party request. My advice would be that, if it's reasonable, you think it's going to help you, then the client can sign a specific mandate if you think that's reasonable, but think about it first. But never sign one that just says, never recommend to the client they sign one that says, to whom this may concern, that is sometimes what you do get from HMRC. I think less so these days, to be fair to them, but never allow clients to do that.
So what advice would you give to firms of accountants who receive an informal third-party information request?
To the accountant themselves, yeah. I'd ask the Revenue to get it formal. Always do that. Then you have to do it, then you have to comply with it then. So anyway, throughout this process, then encourage the Revenue to continue to focus on those main issues. Hopefully they'll be the same ones that were set out in the openness and early dialogue at the start. And then think at this point, would a meeting help in bringing the check to a close? And I think often we as agents don't take the initiative here, because this can help us, to gain control in the way the inquiry has been run so far and how we're going to take it forward in the future. Get in front of the Revenue. Maybe just you, to attend as the agent, to try and argue your client's case and to try and accelerate it along towards where we all want to get to, which is a conclusion as soon as possible. So looking at meetings, so how about arranging meetings then with HMRC? First of all, the Revenue might themselves request a meeting, in which case you need to think, is this going to help move things along towards a conclusion? The client does not have to attend a meeting with HMRC. It's very clear they don't have to go. But if it's going to be helpful, you might want to think about it. And I always think, if we cooperate and we think the client will, put up a reasonable performance in front of HMRC and won't be too scared or frightened and is happy to do it, then, why not, if the conditions are such that it will help move things along. So again, think that if the Revenue haven't requested the meeting, should you request it? And if so, should it be just you, or should you take your client along, or anyone else who may be helpful in explaining the areas of focus that hopefully you're beginning to narrow down? Venue is important here. I think in the old days, most meetings probably took place in revenue offices when there were revenue offices in every town. It's not so easy now. The revenue are going down to these 15 or so big centres, so they won't be able to get in front of the revenue on their premises. But often the revenue say, we'd like to come out and see the way your client's business works. We can do that. We'll have the meeting on your client's business site. Again, if reasonable and you think that it will help, think about it. But I always feel that the best place for a meeting is our offices as agents. The client will feel probably more comfortable there because they will have been there before. You get the chance to set up the room, and the revenue will themselves have to then make the effort, should we say, to come out and meet you. And there are restrictions on revenue expenses and where they can go, and it might make them think, well, do I really need to push this inquiry further? Is it really enough there to justify a meeting? Again, every case is going to be different. You need to think about it. But my preference would be, I think, always in the accountant's office. Sometimes the revenue will say, come to the taxpayer's home. That would generally, in my view, be always a no-no. But again, if the client is, is disabled or has mobility problems and the like, that may be the only option that's available. But obviously, then, if that is the case, make sure you get in there first and arrange the room in the most suitable way that will make it the most comfortable for all parties, and in particular your client. That's obviously the one we should be thinking about here. Right. So getting to the meeting, let's assume you're going to go ahead with the meeting, whether the revenue have asked for it or whether you've asked for it as the agent. Can't emphasize enough the need for good, shall I say, excellent preparation. If you fail to prepare, then you prepare to fail, as the old saying goes, and that I think is never truer than with meetings with the revenue. Make sure you've got a broad agenda. If the revenue have asked for the meeting, get them to provide a broad agenda. Not that broad though. Make sure that it is specific enough for you to be able to talk to your client in advance of the meeting. I won't say to rehearse how it's going to go, but to give the client some confidence that there's going to be a certain structure to the meeting, and that it's going to follow a certain course, and that the questions aren't going to veer away from really the broad areas shown on the agenda. So start, middle and finish isn't good enough for a broad agenda, but something like, introduction, review of records, review of how the business operates, review of banking arrangements, private side, things like that, review of cash and the like. Things like that are on the agenda. It gives you the chance to talk to the client in advance and to prepare the client properly for what's going to come, because by preparing them properly, you're going to have a much more productive meeting. Let the client know that there can be an adjournment at any time. Revenue should say that at the start of the meeting anyway, but if they don't, let the client know in advance that if you feel that the room's getting hot and the meeting's going on a bit, then go outside and have a walk around. You might want a comfort break if it's going on a long time. Or if you're getting questions that you think the client is struggling with or not maybe fully understanding, then that is always a time to say to the revenue, we'd like to go outside and have a chat with our client now in private. We'll come back and we'll talk to you when we've done so. The revenue should never object to that. The client doesn't have to go to the meeting anyway, so any adjournment in it is fair enough. Equally as well, if the inspector is maybe getting a bit, shall I say, overexcited or overzealous, it might be an idea for you to send the client out of the room and have a word with the inspector and say, look, can we just tone this down a little bit? This isn't very productive. It does happen sometimes, and the opposite happens sometimes as well. You sometimes get timid inspectors, and you need to have a word with the inspector to reassure them that things are going the right way. Carry on. Would you like me to lead, almost you can say on it if that happens. And again, I've done that a few times, and what you're trying to do is to get to an outcome to this meeting that will enable you to see an end to the compliance check, to the investigation and the next steps. And very important when the meeting's finished, however long it's taken, to set down what are the outcomes. Just scribble them down. What are the outcomes? What have we decided from this? Agree those with the revenue and agree the next steps, including time limits and who's going to do what by when. Meeting notes. I'm often asked about meeting notes. Very important that we as agents always do a meeting note. And what I often do is just an email to myself, just saying, had the meeting today, took such and such a time, who was there, we discussed the following broad points. The revenue are going to send us their own meeting notes, which always happens. The revenue always say, we'd like you to sign our meeting notes as agreement. Our recommendation is always never to sign meeting notes unless they are so extraordinary much in your favour that you've really feel a desire to do so. That obviously doesn't happen. They should be fairly neutral, the notes that come through. But always acknowledge the notes and always comment on them. Things that maybe weren't quite put down correctly as to what was said, or maybe some points that were missing that you think should be in there. So when you get the revenue meeting notes, acknowledge them and send them a sheet back saying, I think paragraph 27 is wrong because, and oh, by the way, between paragraphs 34 and 35, you should have had an extra bit which was said that is important. So always do that, but always, I say always acknowledge, but I would always, I think, advise against signing meeting notes. And it's not it isn't non-cooperation. Whatever the revenue may say, it's not non-cooperation. You are cooperating because you've read them, you've taken it seriously, and you've made comments on them.
Yeah, question from Angela: what time of day is best to have a meeting?
There used to be a thought that Friday afternoon was the best time for a meeting because the revenue would want to get away. I think times have changed now. I personally think sort of late morning is a good time. Everybody's sort of fresher then if they've had to travel to it. It gives time to do that. It gives time for them to get home afterwards if they've got a long way to go. And maybe they'll be thinking, can we finish for even a late lunch, on this one, get it over in a couple of hours. But it will depend on the type of meeting it is.
What are the rules on HMRC audio recording the meeting?
Yes, they shouldn't do it. They're not supposed to do that. If someone's get asked the other way by the client, can I record it? Answer yes. Always tell the revenue you're doing it, obviously. But the revenue do not audio record meetings unless, there used to be the time when we had the Code 9 meetings that were under caution, that were obviously recorded, but that was well set out in advance and you knew beforehand that it was going to be done.
So does the client have the right to have it recorded?
I think the client can record it. Yes, I think they can. I mean, the revenue can say we don't want it recorded, we're not going to go ahead. It's up to them. But I think if you want it recorded, there's also the thing about videoing it as well. And the revenue, there is a bit in the revenue's instructions about it. The revenue, I think, are reluctant to be videoed, particularly in their own offices, where there may be other sensitive information around. But if you are thinking of audio or video for a meeting, I'd certainly let the inspector know in advance. I think it's only fair to do that.
Generally, the ones we've seen where they are happy, they want a copy of the recording.
Yeah.
They won't.
Yeah, no, exactly. I think that's fair enough to accept that. Yeah. Okay, move on. Right, so we're getting towards the end then, hopefully now, of the compliance check. We've done the opening, we've responded to the opening letter. We've provided the revenue with any extra they might have wanted or not, given what they've asked for following that. We're hoping that we're continuing to focus on what the main issues are. We've maybe had a meeting and we know what the next steps are going to be, and hopefully those next steps are trying to bring things to a conclusion as quickly as possible and in the right amount of tax. So the first part, I think, of the negotiation stage is obviously to agree on any changes to income and capital gains for the actual inquiry year itself. So look at that year in isolation. What's the adjustment for that year? If there is a business and a presumption of continuity in those earlier years, is it reasonable that the revenue would seek to adjust earlier years as well? And here you've got to think very carefully about time limits. We know what the basic time limits for discovery are. That would be 4 years. 6 years if there is carelessness, and up to 20 years if there is deliberate behaviour on the part of the taxpayer. So again, you need to be thinking at this stage, how far is it reasonable that the revenue will be able to go back if there is similar adjustments likely on the earlier years. Always good to introduce behaviours at this point as well, because of course that will have a bearing on the later penalty position. And if the revenue concede that it's only 4 years they could go back, that reasonable care has been taken, then the revenue would then have a problem in trying to go for a careless penalty at that point. The same with the deliberate and careless border as well. You get the same discussions to have on that. Don't forget later years as well, and I've put in here a reference to Inquiry Manual 2040. I think this is often forgotten. If an inquiry goes on for 2 or 3 years, then what about the later years tax returns that have gone in? And this is quite, I think, an important part. And again, I have used this in the past. Working the inquiry, opening inquiries into returns for subsequent years. This guidance applies to any case where an SA year or years are under inquiry. Sometimes the taxpayer will file a return or returns for subsequent years when an earlier year or earlier years returns are still under inquiry. It makes a distinction between aspect inquiry, so there might only be one issue you're looking at in the inquiry year. And then it goes on about full inquiries. Where the inquiry underway is a full inquiry, it's likely that any errors or omissions uncovered in the earlier year's return will be repeated in later years. And then it says to the revenue, you may therefore need to open inquiries into any subsequent returns submitted during the course of your original inquiry to prevent the later year becoming final. And this is, I think, often overlooked by HMRC. And it can be a point you can use if you are in a negotiation and you've put some points back to the revenue that are valid, you consider to be valid. You can then say to the revenue, well, you didn't open an inquiry into later year, you must have been accepting what I was saying. And it can, I think, cause the revenue some real issues if they fail to issue these later years inquiries. That inquiry doesn't need to be a full inquiry asking loads of questions. What it should just be is just covering off the position, saying that, you know, we have an issue we've identified in an inquiry year. We're opening an inquiry just to protect the position for later years. We do see them, you know, fairly regularly, these protective inquiries, but believe it or not, it is missed by HMRC. So do watch out for that if an inquiry is going on over a number of years. So then, what if you don't get an agreement as part of these negotiations? What happens then? Well, I think becoming increasingly popular is the alternative dispute resolution route. And just sometimes the mere mention of this to HMRC will bring them back to the table. They don't want to have to go through the ADR approach. And we do see this. There is a reluctance by some inspectors to join in with this policy, this revenue policy of ADR. And it is a revenue policy now. They should be offering it in suitable cases, particularly fact-based cases where maybe the facts haven't been fully explored or indeed understood, which is, I guess, the more normal position we get to. Alternative dispute resolution is best sought before you get to any formal position on closure notices or discovery assessments, because if that's happened first, you're into then sort of a time limit on every stage of things. So by going the moment you realise you have a potentially contentious fact-based dispute, it is worth asking for alternative dispute resolution if you think you're not going to be able to settle it easily with the inspector you're dealing with. And under ADR, you make an application online. The ADR panel will consider it, saying they are being encouraged to accept as many into the process as they possibly can, particularly if they're fact-based. And if you get into the ADR process, you will then need to prepare a very basic statement saying what you consider the issues are. The inspector will need to do the same as well. You will submit that to the ADR facilitator, who is an HMRC employee but will be totally independent. It is their job to be independent. It is their job to try and get the case you have to a negotiated conclusion through the ADR process. At the ADR meeting itself, each side will read out their simple statement, just 5 minutes worth. There shouldn't be any more than that. Everybody should be in the room together at that point. While those statements are read out, and any initial discussions take place across the table, facilitated by the HMRC mediator, effectively the facilitator who's in the middle. Not going to take sides, that person. They will do all they can to bring the sides together, and often you split into separate rooms, and the facilitator goes between the rooms. They've said such and such, how about this? And back and forth they go. Hopefully at the end of the ADR process, both sides come back together in the room with some form of agreement, which is then written down by the facilitator. Both sides sign it and say, yes, this is what we've agreed. Everything said at ADR is without prejudice to any future tribunal position. So if you do end up at tribunal, what's said at the ADR and any positions conceded at ADR will not be able to be raised at the tribunal. So as I say, ADR try first before any closure notice and discovery assessments. This is where it begins to get formal. The revenue would issue a closure notice for the inquiry year itself and any years they have under inquiry, including later years, and the discovery assessments will follow. What do you do when you get a discovery assessment or a closure notice you don't agree with? Well, you appeal against it. Again, 30-day time limit to do that. You appeal at that stage back to the officer who issued it, back to HMRC. And if they still don't agree with you, at that point, the HMRC officer will issue a formal decision, a view of the matter, a decision of it. Based on that decision, you then have the opportunity to apply for statutory or independent review. Again, this is within HMRC. The person doing the review will be an HMRC employee. However, we do find, I don't know whether Kevin's got any thoughts on this in the cases he sees, but we do find that much of it is rubber stamping with for the revenue with independent review cases.
Yeah, well, the vast majority that we see are lost.
Yeah,
which contrasts with the revenue's own figures, which I think said like 51% are upheld.
Yeah, I think probably the ones we're seeing though are probably the ones that are the more contentious ones, that they are digging their heels in.
I have to say the stats that we gathered, only a tiny proportion of those who go to independent review are represented by accountants.
Right. Okay. Okay.
Very, very few.
Okay.
Okay. Used by accountants.
Right. So the statutory review, if the reviewer comes back and agrees with the HMRC officer, then you then have the next stage of the appeal, which is to apply at that time to the tribunal, and that's what will happen. Doesn't mean to say all is lost, even if you go to tribunal. Doesn't mean to say you're going to have to get there. You will then, the revenue will then appoint a litigator or an advocate, and it is possible, and I've done it several times, to liaise with the advocate and litigator, who, if they think they don't really fancy it going to tribunal on it, whilst they can't, in theory, interfere with it, they will try and get everybody together in a room to try and thresh out the issues. And I've got 2 or 3 of those on the go at the moment, where that's exactly the position we're trying to get to. And I say it has worked in the past, that the litigator has been very helpful in bringing the sides together on that.
Question from Simon: is this good enough? I asked for 14 days to collate documents. They put pressure on the client with a letter saying further delay will result in determination.
With determination of an appeal?
Yes, well, just issue
no, 14 days of the closure notice.
Yes.
Well, the closure notice, you've got 30 days to appeal it anyway. If they want to do that, if they want to set time limits on it that are unrealistic, then they're going to do that. But you still have the appeal process for you to back it up.
Yeah, and I think in practice, Simon, despite what an individual inspector says, the revenue will not take that to tribunal.
Yeah,
they will not defend that.
Yeah.
Because they will not sit in front of the tribunal judge and say, well, we gave him 14 days, so we threaten the client.
Again, it comes down to this, delay point that I mentioned earlier. The department shouldn't be trying to enforce higher standards itself than what it's expecting of others, really, effectively. Right. So then, hopefully, this is quite an easy slide, this one. Hopefully, if you get to a negotiated position that everybody seems happy with regard to the additional income and gains, you can then hopefully work out the tax, and there won't be too much argument over the arithmetic behind that, hopefully. Interest will flow automatically based on the tax. Again, a point just to mention here, interest is normally, you can't change it. It will be set. It will depend obviously on the rate applicable, and the revenue will say, well, your clients had the money all this time. It's fair that it makes commercial restitution be in the interest. The only thing I would say with that is that if the revenue have taken an extraordinarily long time with regard to delay in correspondence, and you've done everything on time, it's well worth throwing that in at that point. That we're paying extra interest because the revenue themselves have delayed. And again, it comes back to that inquiry manual piece I quoted earlier just now, EM 1813. Be wary of that, and if you do want to push the interest point, then try and go to the interest review unit in HMRC and say, come on guys, you've done this, you've messed us around here, you've been really long in replying to us, and because of that, we've got more interest to pay. But then we get to the final point to negotiate, which is the penalty. And again, this is an area where we may get into ADR and appeals and determinations and the like on itself, on the penalty position, because when the new penalty regime came in some 10 years ago now, It was all supposed to make it so much easier for everybody with regard to agreement of penalties, because old-fashioned back duty investigations were stalling at the penalty stage because nobody could agree it. The new system was supposed to get round that, but in some ways I think it's made it, and Kevin laughs there, it's made it very much worse. And I spend so much of my time looking at penalty situations these days.
Question from me, what's the latest update with regards to HMRC's restriction of 10% above the minimum for significant delays?
There is no update as such. It is happening where something is more than 3 years old, the revenue are adding the extra 10% to it. It is in the fact sheet. I have managed to track down the old pamphlet the revenue sent, the old booklet they sent when new penalties came in. Absolutely silent, of course, about anything about going for the extra 10% on it. But it is there, and the revenue are going for it. And a lot of the time, I think, certainly, well, we're accepting them, the 10%, because if it's just a careless penalty that's getting suspended, the client's not going to thank you for arguing it and running up costs on it. But the issues are going to be particularly around the deliberate penalty side, where they're looking at the extra 10% on deliberates, because where that takes clients into naming and shaming territory because they're not getting full abatement, that could have a very significant bearing on the client's business in the future. I gather the revenue have got a case they are lining up. I gather that they may end up going to tribunal. Presumably somebody is resisting it. I heard that the other day. Whether there's any truth in it or not, I don't know. But it's going to happen sooner or later that one of these is going to reach tribunal.
They're not issuing any stats on the challenges to the
policy.
I
haven't seen anything yet on that one. No, so it's probably early days yet. It was only sort of last December, I think, the fact sheet. Although the revenue, of course, is saying it's always been like this, but we know it has the policy on that. Right. So a brief look at penalties just themselves. I think we look at this probably every presentation we do. The onshore penalties for inaccuracies, of course, the offshore ones are different, are increased depending on the jurisdiction it's in, and of course we now have the new failure to correct penalties as well that come in, where people haven't followed the requirement to correct procedures in order to put things right under WDF. But looking just at onshore ones, keeping it very simple, if reasonable care is taken, there's no penalty. If it's careless, it's 0 to 30%. Don't forget 6 years of assessment. If it's deliberate, it's 20 to 70. And if it's deliberate and concealed, 30 to 100. That's what it will be, depending whether it's prompted or unprompted, which we'll see on the next slide, I believe. Yes, so these are the sort of considerations to go through when you get to the penalty stage. First question, it should be pretty obvious. Is it prompted or unprompted? Obviously, if the revenue have issued the inquiry in the first place, they're always going to argue it's prompted. We do get into some discussions with HMRC as to whether some voluntary disclosures are prompted or unprompted. And I think we're going to see this with the failure to correct. If the revenue issued a specific nudge letter to somebody, are they going to be arguing that that's a prompt in terms of the penalty? We don't know yet. We'll have to wait and see. I guess it really would depend on whether it's one of the more generic nudge letters or whether it's a specific one that they have actually got something concrete on the client on. Abatements, the difference between those penalty percentages, the normal one being, or the most common one being for careless, between 15 and 30% prompted. Telling, helping, giving access, you can get 30% reduction for telling, you can get 40% for helping, and a 30% for giving access. So in theory, you should be able to get 100% reduction between the band, 15 to 30% for careless, which brings you back down to your 15%, subject, of course, to that 10%. What was mentioned earlier, if it's more than 3 years old, which will presumably be there and the revenue will go for it. But if it's a careless penalty, you can go for a suspension. And in my view, if it is accepted as careless, there is no reason why you shouldn't fight for a suspension for your client in every case, because the revenue try and argue that one-offs don't apply. If it's a one-off, it can't happen again. We can't set any suspension conditions. You might be able to find some other suspension conditions, because it is all about just behavioural change. And if the taxpayer is going to behave differently by supplying you as the agent with more information, by, say, meeting with you before the tax return signed off, they could be justifiable suspension conditions that you can manage to achieve to bring the net penalty down to nil on that basis. And I would always say push back on the revenue with suspended penalties, but only applies, of course, where it's careless. So how is the inquiry actually finished practically? Well, if it's just the inquiry year, you'll get a closure notice. There might be assessments if there are back years, as we've seen. There might be individual penalty determinations for each year. Bit cumbersome, all those. If there are a number of years involved, the best way of probably settling a case to suit everybody is by contract settlement with HMRC. Always think that through on a contract. Documents provided at the time of the conclusion of the inquiry that need to be considered. The revenue will often ask for a certificate of full disclosure. Many cases justified, but always make sure that it is justified. If it is just a simple, I don't know, car benefit issue, for instance, say, maybe a car benefit's been missed off, it was on a P11D and it wasn't put on there. Is it reasonable to expect a full certificate of full disclosure in those circumstances? Maybe, depends on the case, obviously, but normally I think of certificates of full disclosure being particularly relevant where there's some sort of extractive issue or something, something missed off a return, interest and the like. The client is having to certify again that whilst they signed the tax return to the best of their knowledge and belief it being correct, there's now something else that they need to confirm as well. Be very careful with certificates though. Always think it through. Is this certificate that the revenue have sent me reasonable for what the client has told the revenue and what the client has done, what irregularity there is? Because often we see certificates of full disclosure coming out and they're far too extensive. The revenue, there's a whole sort of suite of these certificates within the revenue guidance that inspectors are supposed to use. Often we see that the client is signing up to saying, the revenue want the client to sign up to say, I've disclosed to you, all bank accounts and all national savings accounts and all premium bonds and the like. If that hasn't happened in the inquiry, and that's not needed to such an extent, then there is a very basic certificate of full disclosure that is in the revenue guidance that you can say, okay, we accept the certificates needed, but we're only going to advise the client to sign the simple one. And every case I've ever dealt with on those ones, the revenue have said, fine, just do that, because often they do send out a too extensive one. Same with a statement of assets and liabilities. Is this necessary? In simple inquiries, no. In cases where there have been particularly cash extractions, I think it would always be appropriate to do a statement of assets and liabilities. What the revenue are trying to cover off here is that in future, if there's another inquiry and the taxpayer says, oh yeah, I got that £50,000 because I found it in my loft, they're going to say, well, why wasn't it on your statement of assets at that time? That's why they want to do it. You can understand why, but always think it through carefully whether it's appropriate or not. And finally, a letter of offer is the contract settlement. That's a normal way of settling.
Should you give statement of assets and liabilities at the beginning of an inquiry?
Never, I would say. Always leave that till the end. If the revenue want to know the asset position, which they might want to know if there might be if they foresee a means issue in settling any tax that might be payable, what I would tend to do is talk to your client, summarise it yourself in a letter as the agent, and say, I've spoken to the client generally and he advises that the following are his broad assets. That's the way I would try and handle that. Again, you're being cooperative, but I would never ask a client to sign the statement of assets at the start, or any of these documents come to that at the start, or a CFD either.
So we spoke about the 10% increase on penalties. Somebody would like clarification. Does that mean the minimum penalty for careless prompted disclosure, for example, would be 10% based on the 0 to 30% range, or 25% based on the
25%? It's got to be more than 3 years old for that. That's what it will be. The issue, of course, is on the unprompted, where it should be 0 to 30. Yeah. Will you then get a 10%er on those 3 years? And yes, they are going for that. They are. Right. Moving on to what is really thinking of the future. You've been through this inquiry. What happens after the inquiry? Well, you want to get things right in future. You don't want your client to have to go through that again. If there is a suspended penalty, make sure the client understands what those penalty suspension conditions are and abides by them. Otherwise, the penalty will come back into charge. I've never actually seen that in practice. I have.
Yes, I've seen a couple where the gets come back into charge.
Often we find the revenue don't follow up on it actually, as well. We're seeing as well. If it's a deliberate issue in there, the client should be referred to the Managing Serious Defaulters unit. This may not be too much of a problem if it's a fairly simple case. The revenue risk score these serious defaulters between, I gather, 10% and 150 points they give them. If they're at the 150 end, they'll give them a very, very close scrutiny. There might be insolvency issues in there. There might be issues with collecting tax. They'll be looking at everything the client's doing. If it's just a simple one, they'll give them a very light touch, and most of them we see that's what happens when they're managing serious defaulters unit. Naming and shaming is different entirely. If it's more than £25,000 of extra tax due to deliberate behaviour since April 2010 as a result of a revenue investigation, and they haven't got the full abatement, which includes where the 10% might come in, the client is potentially named and shamed. It has to go to the unit, and there would appear to be no defence really against that. It should be named and shamed. You can make representations though, but really it's about reducing the chances of future compliance checks by, if appropriate, a change in client behaviour on that. So then that's pretty much, I think, it. Just to summarise, we've looked at how checks start. We looked at how checks are worked. We looked at a brief look at meetings. And then we've looked at how we might conclude matters and put things hopefully right for the future. So any final questions?
Yeah, so we've got just 2 or 3 here. Debbie, HMRC opened a Section 9A inquiry into CGT. It transpires there's also undeclared rental income. Can the client now still use the Let Property campaign to disclose the income, or should it be disclosed as part of the inquiry?
I'd put it through as part of the inquiry. You've got somebody you're dealing with. But part of with these campaigns, one of the things I find quite frustrating is you can't deal with human beings. You have to do it online. If you've actually got somebody there you can talk to sensibly, then make use of that. You think of it as a plus. You can do that.
Simon really makes a comment. He had a telephone call from the VAT admin support office to book a meeting for a VAT inspection. When asked for context of an explanation, he was told, "I'm only the admin person, I don't know why." When pressed, they then commented to make sure the VAT rebate claim is correct.
Right. Well, they obviously want to come out and look at it. There's no sort of the framework, obviously, for VAT issues is different to what we would use on our side. Kevin, you must see these.
I mean, I think the point there, Simon, is yes, they should be telling you straight.
Yeah.
There is no reason. More commonly, I think it is written in the letter to say we want to check the repayment claim, and that'd be fairly common. Also from Nicholas, he had a VAT inquiry going on for almost 18 months. The inspector religiously takes 30 days or more to apply, usually the latter. The inquiry's lost impetus and it's taken additional time as a result to chase the inspector, constantly picking up and putting it down. The inspector has made several mistakes throughout. To what extent should HMRC compensate the client for incurring additional accountancy fees as a result? Yeah,
well, there is the complaints process, of course, formal complaints process you can follow. It is on the revenue website. You should make it clear. You should, first of all, complain to the officer and say, look, I don't think you're handling this properly. It's taking too long. You're getting things wrong, etc. It should then, please make sure you mark your letter complaint. That's very important you do that. And it will then reach a complaints handler who will look at it. If the complaints handler then responds and you're not satisfied, you can escalate up to what's known as tier 2 of the complaint. And you can then follow up on that basis, depending how you what sort of response you get. Ultimately, of course, you can end up with the adjudicator or indeed the ombudsman through your MP. You can do that with complaints, but try and keep it local to start with, I would say, and try and follow the procedure properly.
But what they don't like to publicise is they are paying out thousands and thousands of pounds every year.
It is hundreds of thousands. I think there was some stats published the other week. It was 340,000. Yeah, they are.
More or less. Yes. Okay. And can that be used in penalty mitigation? Because in this case, the VAT notice of assessment has been issued, but the inspector has still not confirmed the penalty.
Yes, whilst the inquiry, the quotes I gave earlier from the inquiry manual, obviously direct tax, it's embarrassing for the revenue. It says that, and it does actually talk about it may have an effect on the penalty abatement. So even though it's a VAT, obviously you're dealing with, refer them to what the inquiry manual says. I would do that and say, you know, you're embarrassed, HMRC, by the way you've dealt with it.
Okay, right. Well, thank you very much, Mike.
Thank you, Kevin. Okay.
Very informative webinar. Covered quite a lot of ground there. This is one of our regular monthly or bi-monthly webinars that we produce for our member firms and selected guests. We will be keeping up our programme next month and into the new year, and I know we have speakers on ADR lined up for that. Additionally, we'll be doing some tax investigation workshops around the UK next year, so please look out for those. If anybody would like to comment on the webinar, we will be sending out copies of the slides. If anybody would like to speak to anybody at PFP about our other services, our tax investigations insurance, our business rates, R&D or capital allowance services, please do get in touch. Meanwhile, I thank you all for listening, and we hope to speak to you all again soon. Thank you.